Hello and good morning. Good morning. It's been a while. I think the last time we met was Thursday or Friday. So I went for a very long winded weekend break. I had a video being processed now that should have been released since Saturday morning to illustrate the previous week, which is the previous week trainings before this week's training. All right. So let's just jump right into our asset class because it's 1 minute to the release of the consumer sentiment. At 10 a.m. from the economic calendar, there will be a release of I think it's 210. So it's currently 10 a.m. and the release for this price action you see now is the release for the current consumer sentiment. So start for the 1 hour. We'll take a quick look at the 1 hour to see what has been going on. So we're at this hypothetical support level. So this is what we're trying to illustrate here from the video I'm trying to upload. Why price use this as a resistance, this couple of back and forth price action, and why we dropped lower, then creating this long new week opening gap. And remember, I told you guys earlier some months back, if you've been w- with us streaming and learning live, told you that when you're going into a new week and you have a new week opening gap being wide like this, as wide as this is the algorithm indicating to you that the upcoming week will be an interesting week. It will be choppy, it will be consolidating. So when a new week opening gap is as wide as this, you are going to expect a body of price action like this. Alright. So note this new week opening gap and all of this. These imbalances are midpoint of higher time frame PDRAs. So they are either, let me take them out. So we make use of new PDRAs, even though they are still fresh because they are still good to make reference to higher time frame PDRAs. We're going to start from the 1 hour time frame today. So on the Sundays, during Sunday's trading, we opened here. So this was Sunday's opening price. So we're going to make this a gray color. Let's make this thicker. So how's all of your week? Did you have I overrested for the weekend and elapsed it into Monday. It's actually good because Monday I do not trade live most of the times unless there are some criteria to change that decision. So here we are Sunday's open. One thing about streaming live is holding up the mic. It's actually stressful. It's easier to just place it. Probably I might need to get those long-winded stick. Those might probably work and do a better job than my hand. That's like an extension, an add and extension. So let's focus on price. First and foremost, let me look at the correlating assets and the inversely correlated assets. So for the euro, we have a negative. For the euro, we had a negative price action, and for the other, we have something higher. I'm trying to confirm if we are actually live here because YouTube has been acting up. Yeah, I think we are live. We are actually live. So I'm trying to share the link to the group. All right. So we have Sunday's opening price here. Remember, when you have a new opening gap as wide as this, you anticipate a choppy price action like this, which we are currently getting in price. So we've already understood that the inversely correlated asset, which is the DXY and the Euro, are in symmetry. The DXY is in a positive change, and the Euro is in a positive number. I do not care about their actual numbers. So I'm going to go to the daily time frame to illustrate this day's trading because we're currently focusing on the Tuesday's trading. So we're going to indicate the midnight opening price for Tuesday. So we're going to be quick with this because we had no pre-market analysis coming into this price action. So we're going to be working with the price action price is currently giving us in real time. As you can see, this is a live market scenario. So we had price came for this high here, just within a tick and then drop lower. Now we're currently trading inside of this new week opening gap. So if you take your indicator here, this indicator is by Crypto Night. So it's an indicator I got from Twitter somewhere around, somewhere around last year or earlier this year. So now we're currently trading inside of this new week opening gap. And this current week's new week opening gap is also overlapping with the within the previous week's new week opening gap, which is this one year. So lower here we had this new week opening gap, higher here was the i- immediate previous new week opening gap, and this new week opening gap here is the second immediate previous new week opening gap. You see, you want to have your new week opening gaps at least dealing with the five within the five recently created new week opening gap. I know I tell you five, but I'm currently having 20 new day opening gaps and probably I think 19 new day opening gaps that I use that for my own convenience. But you want to pay attention to the previous five. So you want to pay attention to if you're doing this manually, which I say I actually do not recommend you join new week opening gaps manually. But that's by the way. So if you are make use of this, you see this 2024 we are in a kind of modern age. So modern problem requires modern solution. So we are currently using this new week opening gap, which is the current new week opening gap one. We have this, the second, we have this, the third. Going to scroll back to get five previous new week opening gaps. So we had three and four, and then finally we have this fifth new week opening gap. So we've been trading from this fifth new week opening gap here, doing Tuesday's trading, the afternoon session for the first week of the second week of October. So we add this price here, trade from this new week opening gap here and trade higher about 135 points higher from this new week opening gap. Higher here. Created this previous new week opening gap. Now I've traded to it here and traded lower to this new week opening gap, which is comprising within the five PDRAs, the five previous new week opening gaps. So I tried to see how price trades around this. Now this is a range. This the low of this new week opening gap and the high of this new week opening gap is a range in which you have another range being represented inside of it, which is this current new week opening gap. So going to so earlier during London trading, we traded to the new day opening gap. So here you have this new day opening gap, and here you have the previous day's new day opening gap. Here with the new day opening gap, also you want to also have about within the five previous days new day opening gaps. And if you'd like me, I have the previous 20 days new day opening gaps. So traded here, yeah, okay. So because when you have a cluster of new day opening gaps and new opening gap, that is like a magnet trying to indicate price likely to draw to that PDRA. And all of this is currently I'm currently join narrative. What we're currently doing now within the past 9 minutes is creating a narrative. So we have to create a narrative to understand what price is currently doing. So we do that on the hour time frame because currently now this 1 hour time frame is our hour time frame. So we're going to drop lower because we already understand that the new week opening up high is this Sunday's opening price, and the low of it is 5,811. So just pay attention to those price levels and the midnight opening price. So let's drop down to the 15-minute time frame and take away this indicator off because having all of these lipsticks on your chart is distracting. You have to pay attention to pure price action as pure and as neat as you can get it. I'm not exactly sure if this stream has been posted to the Telegram. Let me check real quick because this will be a public stream trying to explain and not exactly explain, just letting the community know that I'm actually safe and I'm good because I went almost partly ghost mode after Friday's trading because on Saturday's trading I should have uploaded a video I made on Friday, which is a very deep video on price. You see, oh, I wish you guys can understand what you're getting. But the few that do understand what they're getting, they know. Someone told me my price is actually extremely cheap. It's not about the price. You're not paying because of the money. Let me put it that way. You're not there because of the money. That settings was not created because of the money. If I would have had genuine people that would want to be part of that and learn how to read price, like genuinely that they really actually want to learn how to read price and learn how to attain a level of consistency and profitability that has never been met, that they have never come across because this feeling is something that you get once within the first time. And when you get it, you understand it. It's extremely powerful. I saw a video. Okay, I think it's Jordan. So Jordan, which is Jordan Peterson, he was trying to explain how you could have a certain level of power, a certain level of willpower. I'm over blabbing here and we're coming for this Sunday's opening price, yeah? So I'm going to indicate the 8:30 open price. Don't worry, I'm still following the conversation we're currently having. So we're currently looking at this relative core. I say, let's see how price trades around this point. So as I was saying, so Jordan was talking about understanding power, how the wealth was being created, how that power was genuinely created from scratch. That gives you a certain level of freedom, a certain level of almost absurdity. Like the rest of the world will look at that you're a madman, like you're absurd. What do you mean by that? But you have it. I'm going to post that clip currently now on the Telegram group. So just so you understand what I'm trying to drive at. Just since this is live, so you can get to listen to what I'm trying to point at you. So that's where I'm trying to drive you guys out. So it's not necessarily that you should pay. So you're not coming for the pay. So a couple of you indicating because it's not just from one person, it's not just from two people or three people. I've gotten this thing. It doesn't matter. Don't worry yourself about it. If the price is $100,000 for a session, it doesn't matter. If the price is $100 for a session, it doesn't matter. If the price is $1,000 for a session, it doesn't matter. What matter is the value you're getting. The price, likely you must like to correlate price with value. It happens a lot of time, and I'm also guilty of this. So I do not blame you for correlating price with value. The value is there for you to understand that you're getting enough value for just a little change, and you yourself could acknowledge that yourself. That's an indication the of you understanding that the person trying to deliver this sets of message to you is actually being genuine, trying to like teach, trying to get a message across. Because one genuine feeling is actually understanding that you can relate to a wavelength. There's something about meme theory. So if you could understand the idea of meme theory is like a cult like ideology being passed across by the mind. It's like a mind virus being passed across different people. Because when we get to see a meme, we just chuckle and we laugh. Most of the times we do not try to like explain the meme for its literal meaning. We do not get to do that most of the times. We just see a meme and we chuckle it off or we burst out laughing. Or we do not most of the times get to explain that memes as deep as we should or as deep as it actually is. So we're currently taping the 5 minute time frame. Don't worry, we're still focusing on price. All what we are discussing is about price, 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 price. How price is being determined. If you truly utterly understand how price is being determined in your own individualized business that you have currently, you should be able to price it. So if you can understand the asset, the value in which your company or your product is trying to provide to the marketplace, you can assign value to it. You can assign value to the marketplace and you test it. Test it. It's like you creating relative equal lows. It's like you are currently the market maker now in your own specified business. You are currently the market maker. All of this week, yeah, I'm currently looking at the midpoint of it now. As I'm speaking to you, don't worry, I'm still paying attention to price, and I want you also to pay attention to price. Just listen to my voice like you're listening to your radio. Because most times when I'm trading like this, I like playing music around the background. Not when I want to enter. Most of the times when I'm about to enter, I just pause the music because I don't want to be entering a trade idea based off of dopamine. It's an extremely bad practice. It's like you teaching yourself. It's like a dog. You're teaching yourself. You're giving your reward system a type of understanding that he will get rewarded every time he comes with this dopamine state. But that's overly too philosophical for you. So, if taking out this buy side liquidity here, did we purge out this high? Okay. Also, this buy side liquidity here, all of this back and forth price action, I do not trust it. Even though we have a relative record highs here, even though this high is higher than this. So we have this here. So I'm going to look at the Nasdaq, which is the US 500 for this current asset class. So now this short term high has been violated. Okay. Now I want to see if price trades to the short term high. I will see how price trades this resistance. So we're going to indicate this with a horizontal line to indicate buy side liquidity was taken, which is buy stops. So if you're enjoying this stream, give it a thumbs up so I know you are actually watching and learning and journaling. Because if you want to be part of what we are currently doing here, you should be writing it down. You should be journaling. So I'm going to play the audio clip, the recording of the Jordan's interview that I'm trying to reference. So I don't really care about the copyright strike or anything like that. So Jordan, if you're listening to this is just a reference to you. It's like a reaction. So it won't be that C word won't be put on. So this is what it was talking about, the kind of thing we're trying to get across.
Generously to the community because you're a big man if you can do that, but also your faith in the process by which that wealth was generated. I'm so good at, see, I think women use wealth as a marker of sexual attractiveness, not because they're interested in wealth, but because wealth is the best single predictor of the ability to generate wealth. And the potlatch is that kind of manifestation. It's like, yes, I have all this stuff. I can give it away and burn it, and I can make it again because it isn't the wealth, it's the capacity to generate the wealth, right? It's a process or a spirit, you could say, if you wanted to get metaphorical about it. So there's this
So models, as illustrated earlier, models are something that once you understand your model and you, in fact, for a fact, do trust your model, you would understand the kind of feeling I'm trying to get across, the kind of message I'm trying to get across, understanding when to push a button, understanding when not to push a button, understanding every intricate details of price. Most of this kind of price action, I get to understand them before they form like this. So I get to understand that this is the kind of environment I would want to participate in or not. So if they have already been a rally higher above this relative equal highs here, I would not participate again in this body of price action. Let me explain what I'm trying to drive at. So if, for example, so yeah, we have this clean original consolidation here. So the algorithm sees these highs as clean highs, and the algorithm doesn't like seeing things like this. So also when you move to the left hand side, you have this buy stops resting here, this relative equal highs. So join in the Telegram if you are not, to follow up some conversations, because most of the conversations do not take place on the on these live sessions. Take place inside the, whether inside of the private community or inside of the public Telegram. The public Telegram is also private, but private is also more private than that private. It's like creating an inner cycle inside of another inner cycle. So you have this relative, this original consolidation here, and price left this highs, clean highs like this. Now all of this, well, if you understand the idea of power of three, you understand that all of this consolidation, now the algorithm sees this as one specific set of consolidation, and then you get a manipulation. What is manipulation? What do you understand by manipulation? You have to understand manipulation in its deep, basic, intricate self, in its basic, intricate meaning of what manipulation does entails. So when a price does manipulate to the downside, that is the algorithm trying to deceive, trying to confuse, and thereby generating liquidity on both sides of the market. Generating liquidity. What it does is that we're actually going for these buy stops, but it creates this swing low here, and then it consolidates here, and then exactly at 9:30 here, at 9:30 we dropped lower quickly. A manipulation leg occurred and took out these buys, these sell stops resting below here, and now orders have been paired. The algorithm pairs liquidity below market price for buyers which are trying to, they are already anticipating their target, their exit here. The exit are more important than the entry. So I do not care about all of this entry here when price was currently here. So I'm eyeing these buy stops resting above here. So when price drop lower and then rally higher like this,
then this imbalance like this fail to hold. You can understand imbalances, fair value gaps. You can use fair value gaps and imbalances to understand market structure when a change of delivery, when the change of state of a delivery has occurred. You can also use imbalances to indicate this program. So you have this imbalance like this, price violated here and then dropped low, and use this imbalance here, draw this imbalance out in time as an inversion fair value gap here, and also here, and also here. When bullish, you expect the PDRAs on the left hand side to act as an inversion. So every breaker on the left hand side will become inverted on the right hand side. So that's how price delivers. Alright. So we're currently still taping price.
So I'm trying to like play music in the background while we wait for price to deliver. All right. So we're back. So the inner dialogue is this: I would want price to trade to these stops because we've already done this manipulation. Yes, so for that reason, I would be expecting this type of choppy price action, choppy prices as a rejection because there's still stop losses waiting below this lows here. So that is the narrative idea going into this today's trading. So we have after the 10 a.m. release, after all of this choppy back and forth price action, price one need higher to deliver higher prices. If for in fact the day's trading want to end higher. So let's take a quick look at the daily time frame. So I've been having a couple of actual real life businesses trying to like get things in order behind the scenes, which is actually very good. So that you do not 100% focus on your trading execution and your results because your